Hey everybody, good morning. It's about 8 o'clock in the morning here, and it happens to be Wednesday, November 5th, 2025. I do not do videos very often. There's a number of reasons for that. I believe it's quality over quantity. If you want real time opinions, you need to be on our Discord. You can find all of my opinions and everything on Discord. You can also message me on X, but I'm always here. I have been for the last 7, 8 years, and that's not going to change. Always here to give my opinion, and speaking of that, that is exactly what this is. This is my opinion. This is not financial advice. I'm not your financial advisor. You're responsible for your own trades, manage your own risk, doing your own research, and I'm just giving my opinion on the market. And I'm here to talk just about Bitcoin, only about Bitcoin. I'm not going to speculate a whole lot on altcoins. I'm really going to be talking about Bitcoin cycles and what I have observed going all the way back to 2010. All right, so let's just go ahead and get right into it. What I have here is the BLX chart, which has ceased to continue printing candles as of, I want to say, about September. So the candles that I have going through today are all going to be kind of ghosted on the chart. So just to kind of give a little disclaimer on that, I basically manually drawn the candles from when BLX ceased to print candles on the chart, just so that we can get a little more context there. So what I'm looking at here is the duration of a Bitcoin cycle. And again, this is a Bitcoin cycle. This is not a crypto cycle. This is just Bitcoin, right? Altcoins, they kind of do their own thing, but we're just talking about Bitcoin. So what I want to point out here initially is that we've got, a bottom here that was identified, roughly around October of 2010. And I'm on a daily chart. When I originally built this out, I did this on a weekly in collaboration with a different trader that he and I collaborate together a lot. So we put this chart together, and we've got a bottom here that was created, obviously, in about October of 2010. And from the bottom to the ultimate top, which was right here, this, of course, took about 1,148 days. And what I want to measure here is from this top here, which was about $32.76, to this bottom here. This is what I would consider probably the first bear market in Bitcoin. How far did Bitcoin drop? It dropped about 93%. Right? These are things that we see often in Bitcoin cycles, right? We see huge drops. But from that drop, we can create some expansions, right? We can look for some targets for movement in the next bull market, right? So if you take a look at this, we go to the -1236 extension, which is at about $1,100. And if you extend that over to the right, you'll see that's basically where we topped out, okay? So from the bear market bottom to the bull market top was about 742 days. That's important, okay? That's important. From halving to the top was about 364 days. We'll call it a year. And I'm just using a year in air quotes. That's important, okay? So from bottom to top, about 742 days. From halving to top was about 364 days. Again, about a year. Now let's go ahead and move forward. The duration of the next bear market, right, we can see was about 413 days. From the top to the bottom, roughly 413 days. From bottom to the top, right? So let's just go ahead and just take a look at this, right? From bottom to top, we have 1,064 days. From the bear market bottom to the bull market top in 2017, about 1,064 days. From halving to top, 518 days. That was much longer duration from halving to top than the prior cycle, which is about 364 days. Now, from the top to the bottom, right? So we're looking from the 2017 top to the 2018 bottom, about 364 days. Now, from there, if you take a look and go from the bottom to the top, let's go ahead and just kind of compress this a little bit so we can see what we've got here. So from the bear market bottom to the bull market top, 1,064 days. So how does that compare to the prior cycle? 518 days, 1,064 days. Much, much longer. The duration was longer. Compare that to the previous cycle, 742 days. Again, we go from 742 to 1,064 to 1,064 days. It took longer. But from halving to the top, right, so that first cycle, maybe this was an anomaly because there wasn't a whole lot of activity, only 364 days. But then we get to 518 days, then we get to 546 days. So we are starting to see a much more mature asset, right, much more mature asset, and it's taking anywhere between 500 and 600 days from halving to top. Okay, so now, again, from the bull market top to the bear market bottom, 364 days in the 17-18 bear market. And then if you take a look at the 21-22 bear market, again, 364 days from the top to the bottom, about a year. That's going to be important in the future, right? So that's going to be important in the future. And then from the bull market top to the bear market bottom, about 413 days. So again, a little more than a year, but we're still looking between 360 and 415 days, right? So really only talking about a duration of maybe a year, right? So let's go ahead and keep on moving forward. So now we are looking at the current cycle, okay? So let's just talk about this for a moment. So if we follow very similar patterns, right? If you're talking from the halving to the top, right, we're really looking at, this time period is where the projections are that we would see a top on Bitcoin. Conventional cycles would have said the top would have been around October 5th, 2025. Okay, so if we take a look at that, that really was roughly where the top was, right? You can see right here on this green vertical, that is where the top was. And every bull cycle, the extension targets are not as exaggerated as the prior cycle. Now, what do I mean by that? All right, let's just go ahead and zoom back a little bit and just take a look at the measurements, okay? So the first measurement I talked about was the bull market top to the bear market bottom, and we were looking at the negative 1236, and that's where we tagged. Now, if you go forward, right, bull market top, bear market bottom, and again, we're talking rough numbers here, the targets should be less, okay? Targets should be less. We had the negative 1236 tapped there at 1100, and now we're looking, okay, well, maybe the 1236 gets hit again at 13,000, and that's actually, it went a little bit further, okay? So those two cycles did get to the negative 1236 extension. That was good. Now let's take a look at 1718. Now we've got bull market top to bear market bottom. We only made it to the negative 618. So that is significantly less. But it doesn't change the fact that from that 3,100 bottom to the top was still 2,000%, right? So we still had exponential gains on Bitcoin, which everybody likes to, really talk negatively about when it comes to Bitcoin. But fact of the matter is, Bitcoin really has overperformed basically everything else. There are some exceptions, and I'm not going to get into those, but Bitcoin really has overperformed a lot of different things, even in this cycle, right? But, again, talking 2018 through 2021, the end of 2021, November of 2021, that is important, right? Okay. We had about 2,000% rise, but it only went to the negative 618, which was much less than that negative 1236, which was at about would have been at 189. That is, not something that got hit, obviously. We got to about 64,000, and that was right there around that negative 618. So now let's fast forward again. And I was projecting at the time that we were not going to get to the negative 618, that we were probably going to stop somewhere between the negative 382 and the negative 618. Well, we got to the negative 382. We extended just a little bit above that. We went to, about 126, which is a little bit above, and we have so far rejected from there. Okay? And that, again, is going to be important. This trend line that I have here is important. It's not important when it comes to cycles, but it is important, and I'll talk about that just a little bit, right? So, again, from the halving to the top, right? Let me go ahead and compress this just a little bit more again. We've got 574 days, which would have projected November 17th, okay? So we're basically looking at the bottom to the top, took about 152 weeks, the last two cycles. So if we take that from the bottom to top, right, that would have put us right there at October 6th, which happened to be roughly around the time where Bitcoin did top out. If the halving to top is taking a little bit longer each time, then maybe we wouldn't be done in October. But, by looking at the price action from the last week or so, a lot of people would say that we are in a top out mode on Bitcoin. Now, again, that doesn't mean that we won't see a significant rally, because more than likely we will, especially in a more mature asset like Bitcoin. But, we have to look at this from the significant tops, right? Bear markets have taken between 52 to 59 weeks, roughly a year. Rock bottom to the top of the first cycle took 164 weeks, and that's more in line with the next two 152-week cycles. So, again, bottom to top, we'd be looking at October 4th. Having to top, with the extension taking it out a little bit further, we'd be going to about the 17th of November. Now, historical tops typically have happened in November, December timeframe, okay? You look at December 2017, the big mania top right there at, Bitcoin getting to about $20,000 when futures were launched. And then, of course, we started a bear market and all of that. Then November of 2021, right? I'm going to ignore the top here that was in April of 2021, but focus again on November of 2021. Okay, so December, November, that's minus 1 month. And now we're looking at October, which would have been minus a month, right? So, just looking at that in particular, we're looking from top to top. It was taking basically, X number of years minus a month, X number of years minus a month. Would have taken us to October. That would have been a likely area for there to be a top to be on Bitcoin. So, and again, looking at the price action, looking at everything, all of the evidence that we have, it is highly probable that Bitcoin has topped out. Now, again, that doesn't change the fact. Let me move on to a different chart that actually has some history here. I'm going to go to Bitfinex because I don't think I've got anything drawn out on this chart. Okay, so it doesn't change the fact that something significant has happened. I'm just going to go ahead and draw a couple trend lines here just to focus on what the price action currently looks like. All right, so we've got this right here. Oops, let me fix that. Here we go. All right, so this is important. This one right here looks, I actually think I might want to move this. Let me just check here because there is an important trend line that we do need to be paying attention to, and I suppose this is probably as good as any, right? So we've got we've got some significant touches down here that start, and then we've got a touch here. We really haven't tested this one. This one in particular, we had a test here, we had a test here. We even had some tests up here in the late October. Again, noting that the top was October 6th so far. So that's that top we should be paying attention to. Now we're starting to see a bit of a breakdown. If we take a look at the indicators on a daily time frame, things are moving down. This is not good. It's really not, right? I'm not going to lie. Bitcoin doesn't look good right now. Doesn't change the fact that it's not going to just start of moving up here, but look at the moving averages. So I'm on the daily time frame. The blue is the 50, the red is the 50, the blue is the 200. What do we have that is starting to occur right now? This is very, very important. We've got a death cross that's currently forming on the moving averages, which is currently projected to cross on November 15th. Again, that's kind of looking at that extended target that I was talking about earlier. So we've got some moving averages that are converging on each other. Now, that doesn't mean things are bearish, right? That doesn't mean things are bearish because, if you look back here, we had a cross right here. And what happened when that crossed? Well, take a look. That was actually the bottom. And Bitcoin went on to rally basically about 68% from there, right? That was when Bitcoin bottomed out at about 75,000, and it went, of course, all the way up to 126. So just because you have a bear cross doesn't mean that is, a confirmation of a bear market, because there are things that are called mean reversion, which means that the price action tends to revert to the mean or the moving average, what that average is. And, it just so happens that, once it reclaimed that, that 50, it started to really rally and start to go back up to new highs. At that time, Bitcoin had topped out at about 110, didn't quite get there, and people were like, all right, well, that was the top. Now we're all the way back down here at 75,000. That was a significant pullback, right? So we're talking a 32% pullback in Bitcoin, and people are dying right now. Bitcoin's only dropped about 21, 22% right now, which is a lot, but look at where Bitcoin has come from. You have so many people that are, late to the game, or they're rotating funds from one asset to another and not taking that and holding that profit or cashing out. They just keep rolling and rolling and rolling. It's like options trading in the stock market. You keep rolling and eventually you're going to lose everything that you had worked for. So that's why it's important to, move funds, but to protect your profits and just kind of like work with that principle and eventually get to the point where you're just working with profit. So now that we have seen some of these breakdowns, right, now that we are starting to see break in structure, we're starting to see moving averages converging on each other, I would venture to say that we are probably in an area where Bitcoin is either creating or has already created a significant top. And not necessarily that we are confirmed starting a bear market, but if you measure things out here, let me just go ahead and zoom in here. I'm going to go to like a 4-hour time frame so we can see this with a little more clarity. Okay, we had a big drop back here on October 10th, right? So if you take a look at this of course, this is a pretty significant drop. I would consider this an A. And then I'd consider this a B, and then I would consider this either a C or a C almost in. Right, so if you take that and you kind of extend that out, we have a nice little A, B, C on a lower degree that is going to start to make up this correction, right? So we've got a B here, and then we start to see the movements down to a wave C. We had a rejection, a front run of the 618 right here. We got a little higher than this point here. We didn't quite get to the 618, which does show a little bit of weakness, which is why I think wave C might come down to about 95 to 96,000. When is that going to happen? I don't know. It might not even happen, right? But what I am looking at here is the possibility that we have, from this point here, a nice little 1, 2, 3, working on that 4, and then go down for the 5 to complete the wave C. So what would invalidate this potential, right? So again, looking at this area here as a target, down here at about, that negative 382, which would be like a target for weakness, what would be the invalidation? Well, your invalidation is going to be right here. So this is going to be your invalidation level. That's going to be your bearish invalidation level, which means that this 1, 2, 3, 4, 5 is not valid, and this is more like an ABC, and we're looking at maybe a WXY. Not to get too technical on where this might be from an Elliott wave standpoint, it's going to be really hard to count this A because of the trajectory that we took on this initial move, right? So I'm not going to drill down and try and work that out, but it looks to me like we have the beginning of a correction. We have pretty much 3 clear waves up to this wave B. And then it looks like we've got a little 1, 2, 3, 4, 5 into a 1, ABC into a 2, 1, 2, 3, 4, 5 into a 3. We're looking for an ABC into a 4 before we go down for the 5. And if that's the case, we're going to measure wave 2 to wave 3 and just look at how this all lines up so far. So we should stay somewhere below 105,000. 105,000 is really going to be where we should top out. So we should see a rejection from this area right here. And let me go ahead and mark that. We should see a rejection from this area right here. I'm going to mark it in red. We would anticipate a rejection from here. And maybe this looks a little bit like this, A, B, C, and then we see a 1, 2, 3, 4, 5 going down into this level here. From here, I would expect to see a pretty significant bounce. I would expect to see pretty significant movement to the upside. If I go to a daily time frame, what would that look like? Okay, so if I look at the daily, and let's just say, just in a perfect world that we stop here at 95,857, what would be my ideal movement from there? Well, let's go ahead and measure what that would look like, or what that could look like. And let's just take a look at our moving averages, okay? If we take a look at the 200 on the daily, look at the projected path for it. So if we do start to see, this bigger correction to the upside, which would be, what I would consider like the Santa rally. Stopping there at the 50 at about 110 would make a whole lot of sense. And why would that make a whole lot of sense? Well, first off, that's where we topped out. And I know this is going to start to get a little messy, so apologies for that. But I do want to draw this out for you and show you what that would look like. So I'm going to go ahead and draw this. We've got this top here, we've got this top here, we've got that top there. And you can see evidence as we go over to the right. We've got support there, we've got support there. This zone is going to be important moving forward. So let's just go ahead and draw that moving forward. And what is like right smack dab in the middle of it? It's that 50, right? We also have this 382, which would be a sign of weakness. If we only get to about 106,000, that's a sign of weakness. I would expect we would probably get somewhere in the middle of this zone before we see a potential rejection, right? And if that happens, if we get a rejection there, then we're talking about a major bear market. If we do push up through there, I'd be looking for a retest and then a continuation higher. But for right now, that 50 simple moving average on the daily is going to be what's going to kind of hold us down, right? The 200 is also, or sorry, this is the 200. I apologize. The blue is the 200 that's projected to be there at about 110. The 50 is going to be a little bit of resistance moving forward. Maybe that's what holds this up, right? As time goes by, maybe we stop there, and then we see this, and then we start to see that movement there. And as time goes by, the projection for this moving average is going to start moving lower as long as we continue trading below it. But this, again, is what I'm looking at for Bitcoin. Again, I believe it's possible and preferred for Bitcoin to move down to about 95, 96,000 before we start to see a move to the upside. And I'm not going to sit here and start talking about targets for bear markets, but you have to take a look at MicroStrategy. Keep an eye on their liquidation levels. Keep an eye on where they've got to unload a lot of their leverage. And that's going to be really where the next target is. Just like FTX was a target back a couple years ago. MicroStrategy is going to be the target moving forward, and I don't know if there's anybody else out there talking about it, but they're going to be the target because they're the ones that hold so much Bitcoin, and they're just an obvious target. When you publicize all of those holdings, you create a target for yourself. And as much as MicroStrategy has a lot of liquidity, they have a lot more resistance up against them by way of people that have just been holding hundreds of thousands of Bitcoin over the last 15 years. So we have to keep an eye on that. We have to recognize that they have the ability to force a lot of big players out of the game, and MicroStrategy is going to be that major target. I'm not going to speculate on what may happen to exchanges, but MicroStrategy in particular, I think, is going to be a likely target for the next bear cycle, and we do talk about that on our Discord occasionally. So that's where I'm at. All right, guys, I'm going to go ahead and end it up here. This is kind of where I wanted to close and kind of leave things. But, of course, I'm always on Discord. I'm always here. I have almost never not been here. I've been here consistently for the last 8 years, and I do not create a whole lot of videos because, to be quite honest, it takes time and effort to create these. And, it really doesn't yield a whole lot for me, so I've kind of slowed on that. But if you want to, converse with me, I'm talking like me, like one-on-one, I'm always on Discord. You can always ping me. You can always reach out to me on X as well. Discord's the best way to get in touch with me. You can find all the information on how to access our Discord server on BitDoctor.org. There is both free and paid options for that. And of course, we also do more than just crypto in there. A lot of our focus is actually on stocks. I do focus on crypto because it's a good risk asset to be in. So that's something we focus on, but I do focus a lot on stocks and options and all of that. So you can find all that information on BitDoctor.org. And last but not least, wherever you are in the world, I hope you're having a great day, great night, and a great evening. Take care, everyone.